I did see some people saying, well, Tesla's lifetime profit is roughly 25, 30 billion, and this whole package is like a $30 billion pay package. That is not the right way to look at it. The right way to look at it is how much shareholder value has Elon created? And if we go back to when the 2018 compensation plan was created, Tesla was roughly a $50 billion company. They're a $1 trillion company today. So that's $950 billion in shareholder value. Some of that is owned by Elon, of course, but there's hundreds of billions more for everybody else. So yeah, that's the right way to look at it, not like how much profit has the company generated.
Welcome to the Gigacast. My name is Gav, here today with Omar and Sawyer. And Tesla just made a giant move with a massive pay package to Elon Musk. We're going to get into all of the details, how you should be looking at this and focusing on it. Before we do so, for everyone watching here on YouTube, we love the views. Keep them coming. Please go ahead and hit that subscribe button. Help us, help everyone. Let's blow the Gigacast up into the biggest and best Tesla channel on YouTube. Let's dive right into this pay package. So this is a staggering number per Fortune 500. The Tesla board has reinstated Elon Musk as the highest paid CEO in history with a staggering new $29 billion pay package. Sawyer, I think that there's a lot going on around this because, of course, you still have things going through the courts, right? There's other pieces here. How should people be intaking this information?
Yeah, so I love the approach that the board took with this. It's essentially a backup plan in case the lawsuit against Elon's 2018 compensation package in Delaware doesn't go his way. And, Tesla hasn't gotten a hearing date for that yet, but I think it should happen in a few months, and then we'll get hopefully a ruling by the end of this year. But in case it doesn't go his way, Tesla is giving Elon a 96 million share award, which I think is a good move. This is for work already completed. This is not for like future work that he might complete. We're just paying Elon what he's already owed, essentially, from the agreement back in 2018 for his compensation plan. And maybe I should just like explain the actual award and details itself, because I think that's probably important. So as you said, it's an interim pay package, 96 million shares, currently worth about $30 billion. And the award provides the provisions of, again, 96 million shares. The vesting schedule will vest upon the second anniversary of August 3rd, 2025, so 2027 in August. The purchase price will equal to the split adjusted exercise price of the stock awarded to Elon back in 2018, which was $23.34 per share. So if in a couple years he invests these stock options, essentially, he will have to pay taxes on sort of the difference from $23 to whatever the stock price is at that time. So let's say if the shares vested today, he would have to pay roughly an $11 billion tax bill just for these 96 million shares. So that's sort of something to keep an eye on for the future. The other thing is a requirement that Elon has to serve continuously in a leadership role at least for the 2 years between the 2 years vesting period. A pledging allowance to cover tax payments or the purchase price, a mandatory holding period of 5 years from the grant date, which was like a few days ago, except to cover tax payments or the purchase price. And then if the Delaware court fully reinstates Elon's original 2018 compensation package, essentially this interim award will just be forfeited. They'll just get rid of it. There's no need for it, because that would essentially just be double dipping, which they don't want to do. And I think the main goal for this stock award is to give him part of what he's owed from that 2018 compensation plan, is like I said, but it's also to get him closer to the 25% ownership control that he's been wanting for a while. He stated that early last year. And another thing I think was really important in Tesla's announcement was they announced that they're going to address a longer-term CEO compensation strategy, and will put it to a shareholder vote on November 6th at the annual shareholder meeting. So this means that we're going to finally vote on Elon's next compensation plan, because this guy hasn't really been paid to be Tesla CEO for the last 8 years, because this 2018 compensation plan is held up in court. So he's just been working for free, despite the fact that the stock is 10x or 500%, whatever it is. And he met every performance metric in that original 2018 compensation plan. So this is just about giving him what he's due, what he's owed. And then the next compensation plan will be about addressing the future. I believe if we include this 96 million share award, minus the taxes. That would get Elon from a current 12.9% ownership of all the outstanding shares to, I think, 14.7%. Now, obviously, that's a ways from the 25% control that Elon wants. But this award is about 1/3 of what Elon would be getting if he ends up winning the Delaware case. So essentially, if let's say Tesla and Elon lose that Delaware case, Elon will take this 96 million shares. He actually gets the voting control for these 96 million shares, even though they don't vest for a couple of years. He gets the voting control next month in September, so that's important. But if they lose the case, they're going to need to make up another 10% from that roughly, 14.7% to 25%. So I think the way they'll do that is maybe they work something out, because we are going to be voting on whether Tesla should invest in XAI this November as well. This is shaping up to be a really interesting annual shareholder meeting with the compensation plan vote and the XAI investment vote. But they could work something out there where Elon gets a higher percentage of Tesla ownership. So maybe that bumps him up a couple more percent. And then the rest can probably be solved maybe with the next compensation plan. So I don't know what that'll entail. We'll see maybe in the proxy. And I think the only other thing would be these 96 million shares are coming from sort of 113 share that were available for issuance under the 2019 plan. So they weren't just like created out of thin air. These are actually available for quite a while. So they're just using up sort of an allocation that they were allowed to. So yeah, interesting strategy. We were sort of wondering what they would do with this. How are they going to address Elon's wanting 25% voting control? How are they going to address it if Elon loses this Delaware case? So this is an interesting strategy, sort of a backup plan in case the ruling doesn't go their way. But I suspect the rest of the getting him to 25% will be taken care of in the next comp plan.
Should we expect to see any more of these between now and the November vote?
No, this will be it, I think. Yeah, we're just going to wait now for the proxy to come out next month. And then we'll sort of see what officially Tesla's proposing or putting forth, investors for that matter, into the proxy for the annual shareholder meeting vote. How much are we going to have to invest in Tesla? What the performance metrics might be in that comp plan. It's going to be interesting.
Omar, what do you think of it? Pretty same page as Sawyer? Any other details?
Yeah, so, I mean, the characterization that, this is some huge pay package or, I think there's not really any additional dilution here. Because the initial 2019 pay package, let's rewind a little bit back to 2018. Elon was originally supposed to only serve as CEO of Tesla until they introduced the Model 3, if you remember. He was the CEO of SpaceX. Now he's like the CEO of 50 companies and the father of like 50 kids. But back then, he wasn't trying to run a ton of different companies. So he said, okay, I'm going to stay as the CEO of Tesla until the Model 3 is introduced. And that would have been a very different future for Tesla if he had left when the Model 3 was introduced. I don't know if the company would have survived through ramping the Model 3. So then they introduced the 2018 compensation package. They said, look, if I can get the value of Tesla from 30 to 60 billion to 650 billion, essentially 10xing the value of the company, I want to have these stock options where I'm able to purchase shares that I'm granted. And if I don't increase the market cap and profit, then I get nothing. And everyone laughed. They said, $650 billion? There's no way Tesla's getting to a market cap like $650 billion within 10 years. And lo and behold, Tesla's sitting right now at $1 trillion valuation, way above the $650 billion target.
I think it's fair to say that 2018 comp plan was the most shareholder-friendly comp plan that could possibly be created, or ever has been created for that matter.
Yeah, I totally agree, because if shareholders didn't make money, the CEO also didn't make money. Rare to see a plan like that. And if shareholders became rich, well, he got only a tiny portion of that shareholder value that was created for shareholders like me and Sawyer. So the 2018 compensation package, I think, was great for shareholders. Shareholders obviously saw Tesla rise to become $1 trillion company. And Elon didn't get his stock options. He kept up his end of the deal, but he didn't get the stock options he was promised. So that's going through courts right now. Hopefully they reverse that decision on appeal, given that shareholders reaffirmed it multiple times. But this is kind of like a down payment in a sense. It's about a third of the value of that 2018 compensation package. I think the board is saying here, look, regardless of what happens on appeal, we're going to try and make you whole. We're going to try and make this right for you. And, here's kind of just a grant. It's only one or the other. So if it is reversed on appeal, this is irrelevant. This kind of goes away. But if the 2018 plan is thrown out or the appellate court sort of holds up the lower court's decision, then you've got this new award, which sort of starts to make him whole. Now, you saw the stock actually kind of shoot up when this news was announced, which is kind of unusual, right? A huge equity award typically is not something you would think would make the stock go up. But I think there's been a significant overhang on the stock. People looking at Elon's politics, his involvement in XAI, other companies, people just wondering whether he's committed to Tesla. Now, I think people who know him well know that he's really excited about what's happening with Robotaxi and Optimus. I don't think that he wants to leave the company, but there was questions on Wall Street about his commitment. And I think this eases up a lot of those questions. And that's why you saw the street like it.
I like the point that you're making of it's either or. I don't think most people know that if that other pay package goes through, that this becomes irrelevant, right, with those pieces. I would venture to say most people think that this is done. And then if that one gets approved as well, hey, more on top for Elon as well. Sawyer, one of the little tidbits that I mentioned when we were talking earlier was around Tesla's total profit all time compared to this package and how those numbers seem to kind of align. And you were saying that's not the right way to think about it.
Yeah.
I'm curious.
I did see some people saying, well, Tesla's lifetime profit is roughly 25-30 billion, and this whole package is like a $30 billion pay package. That is not the right way to look at it. The right way to look at it is how much shareholder value has Elon created? And if we go back to when the 2018 compensation plan was created, Tesla was roughly a $50 billion company. They're a $1 trillion company today. So that's $950 billion in shareholder value. Some of that is owned by Elon, of course, but there's hundreds of billions more for everybody else. That's the right way to look at it, not like how much profit has the company generated.
Absolutely. Omar,
from a financial perspective, market cap is essentially a projection forward of the company's future profits. So you want to look at it as a percentage of the market cap. That's kind of what the shares are, right? It's a third of the value of the 2018 compensation package. So you have a guy here who's been working now for 7 years without being paid, essentially. He's created enormous shareholder value. I think the best CEO you could possibly find would have made Tesla succeed as an electric car company. What makes Elon so unusual and special is he creates the business that no one even thought of, that nobody saw coming, a ride-hailing business, a humanoid robot business that even a great CEO, I think, wouldn't have created there. And you look at XAI, I mean, they've gone from nowhere to being worth over $100 billion. Just the ability of this guy to create shareholder value, to create and form new businesses is unparalleled. And you have to be able to compensate him to match. If we paid him a $5 million cash salary or even a $50 million cash salary, that doesn't matter to him. He's got $400+ billion worth of equity in his companies. This is something that was really designed to align with shareholders and um, help him sort of meet the goals that he has in getting to Mars, essentially.
One last question that I saw from people was, hey, this whole other pay package has been tied up by judges, votes, other items like this. How is the board able to just basically create another pay package and push that through without facing any similar deterrence or obstruction?
Yeah. So importantly, last year during the shareholder meeting, we voted to move Tesla's sort of incorporation from Delaware to Texas. And that's important because Texas has certain bylaws. And so a few months ago, Tesla instilled new bylaws within their under their corporation, which states that you have to own 3% of outstanding shares to bring forth. I'm trying to remember what kind of lawsuit it was. Not just any law. Hold on, I want to make sure I get
Shareholder
this right.
litigation.
Yeah, essentially shareholder litigation. And so you couldn't. That wasn't the case under Delaware. So that's what enabled this sort of predatory law firm that wants to line their own pockets to find someone, the shareholder with 9 shares, Tornetta, to sort of use him as a puppet to enable them to get a really favorable ruling and line their own pockets. So that won't be able to be the case with a similar lawsuit going forward with Texas. So
yeah, this shareholder litigation is the biggest scam, because anyone who has even one share typically can initiate shareholder litigation. So people are initiating all kinds of litigation, even people who aren't really serious shareholders. And the company and shareholders have to pay to defend against all of this litigation. So it definitely harms the company. It's distracting. It obviously costs a lot of money to retain all those lawyers. I'm really glad to see that in Texas they have additional protections that, for example, require a substantial stake before you can initiate shareholder litigation.
Got it. All right, that's perfect. That explains it. I think for anybody that has additional questions on the pay package, drop them in the comments below. We can circle back around next week, but hopefully this clears up 99% of items. Sawyer?
derivative action lawsuits. That's what derivative action. That's what it was.
Sounds like my algebra class. All right. Rotating a little bit over, Robotaxi is kind of still the big story around Tesla. I feel like when I'm having conversations on X, on Spaces, a lot of them focus on Robotaxi right now. And I think that there's questions as to where they are within the rollout. So they've expanded the geo map. There's questions on, are there more cars on the road now? They have also expanded into California. A lot of questions on what does that look like? I don't think it got the same coverage necessarily that Austin got. So would love to maybe turn it over to you, Omar, if you want to roll out a little bit of what this bigger picture looks like.
Yeah, I mean, Tesla is running a ride-hailing service. This is a big deal. This is something that we've wanted to see for a long time. You've got a new sort of line item, okay? It's a nascent line item, but you've got energy revenue, automotive revenue, and now ride-hailing revenue. And I think it's safe to say that's going to be the fastest growing segment for Tesla in the coming years, is their ride-hailing network. So, in one sense, they're expanding very fast. On the other sense, they are really just getting started. So they've expanded their Austin Geo-Fence for a second time. In the southern part of the Geo-Fence, it's gotten much larger. So that's great to see. I mean, it's only been, 30, 45 days, and they've already expanded their Geo-Fence twice. The surface area seems to cover most places that you would want to go in Austin now. So that's great to see. And I think there's going to be further service area expansion coming. In the Bay Area, they are actually starting to give rides with a human behind the wheel. And actually, I should mention, in Austin, we did see them start to expand beyond the initial 11 cars. We saw some new license plates that weren't used before. So they have somewhere between 14 to 20 cars, I think, at this point. It's hard to know for sure without counting all the license plates, but based on the license plates we're seeing, they are adding additional cars, which is great. They are adding a few new users, but it is still pretty small. It requires an invite. Same thing over in the Bay Area. requires an invite before you can use the service. But anyone who has an invite to the Austin service can also ride in the Bay Area. And I went up to the Bay Area to try the new service. It works pretty much exactly like Austin. You see the same UI, same Robotaxi screen, pull over, stop in lane, on the screen there. In California, you've got the same interface in the back. You can play music, watch movies, whatever. The only difference is the person is sitting in the driver's seat instead of in the passenger seat. And in California, you need a permit to deploy a vehicle without a driver. Tesla is in the process of securing that permit. They don't have it yet, which is why they have to have somebody in the driver's seat of the car. But other than that, they're driving around without intervention. It's functioning from a technical perspective a lot like Austin. So that's a good start. A huge service area in the Bay Area. And I'm excited to see them expand, open to the public, add new cars, and remove the people in the car for a completely empty car for customers.
I think the Austin Geo-Fence and the California Bay Area Geo-Fence are so big that I think they just need to add more cars at this point. Like I'm seeing wait times sometimes of 25 minutes or more. And in some cases, you can't even get a car because there's just too many, too many people requesting rides or whatnot. They just need more cars. Yeah.
Why do you think
Yeah,
that they're
yeah.
not
I think
adding
that's
more?
an important point. And I did see Elon write a tweet saying they're working to get over 100 cars in the Bay Area. But when I use the service in the Bay Area, oftentimes I wasn't able to get a car. So I took a ride from Palo Alto to San Francisco. On the way back, I had to take a human-driven Uber. I also took a ride to the Computer History Museum. On the way back, I had to take a human-driven Uber. And funnily enough, both times Uber sent me a Tesla, an older Tesla. And it was just funny to compare seeing the human driver and they're trying to use their phone or tap on the screen. It was really such a step back. But yeah, I definitely had problems getting a car. And I was thinking, man, if this is an invite only service, only open to Tesla employees and a few customers, and they're still struggling to get a car to me, they really need to add a lot more cars onto the network. So I don't know if they just need to hire and add more cars, if they maybe want to add customer cars through, some process where a non-Tesla employee could provide rides onto the network, sort of like an Uber model. I think they'll probably be, just sort of hiring internally for now. But I agree with Sawyer. You can definitely see that they need a lot of cars. Wait times and the ease of getting a car is definitely behind what you need to be a serious ride-hailing service.
It's especially weird because they're inviting some people from overseas, like to come and try out the service, and people are actually flying in, and then they can't get rides like that. That's no fun. So they need to, because the Geo-Fence is so big now, they do need just add more cars.
What's the holdup here? I mean, I thought the whole idea was that, hey, we have these cars rolling off the line ready to go.
I mean, there's nothing from an operational perspective that stops them from adding additional cars. I think it's really just about safety, making sure that the software is perfect before, multiplying the fleet. If I have a fleet that's, let's say 5 times bigger or 10 times bigger, the chance of a crash also increases by 5x to 10x. So you want to make sure that probability is extremely, extremely low before you 10x the fleet and maintain the same low probability of an incident.
It was really interesting to compare the pricing between the Bay Area ones with the driver or a person in the driver's seat, and then the sort of driverless or safety monitor rides in Austin, Texas, which are roughly a little over $1 a mile on average in Austin, but it's like double that in the Bay Area, which is interesting.
I feel like that also is just a very expensive area in general, right? Like everything in that Bay Area is just a highly priced. So maybe it kind of adjusts with the area.
Yeah, part of it could be labor, part of it could be market rates. I do think really it was interesting that they rolled out dynamic pricing about a day before. So that's an important step. No more 420 or 690 rides every time, which is, that was fun at the beginning. But they did need to move to a more serious pricing scheme. And, in Austin, I was spending 420 a ride. My first ride in the Bay Area from Palo Alto to San Francisco, about a 40-minute ride, was about $69 compared to $80 on Uber. So definitely a big difference there. I think Bay Area customers will probably be willing to pay it, but yeah, definitely a good move to dynamic pricing.
I had a kind
Evan,
of
I
one
just put
other.
in the
Yeah.
Gigacast chat some photos of Waymo's sixth generation Robotaxi or Robotaxi hardware. I figured it'd be interesting to sort of look at that because there's always, of course, this talk about Waymo versus Tesla and, costs. And I think even with this sixth generation hardware, uh, and this is a van from Zeekr built, I think specifically just for Waymo. Um, Even with this reduced cost hardware that they're claiming is cost them much less, I think this van is still going to be more than twice as expensive, maybe even 3 times of what Tesla Cybercab will be. And
Wait,
so people are. Go ahead.
I actually want to dive into that because I was on Space yesterday, I believe, and there was somebody who was discussing that the costs have come way down. And I really wasn't as familiar, but I was looking at it for the Waymo cars now, and it was saying per Grok that the base model for the car costs, anywhere from 50 to 80. And then that the LiDAR, they've gotten the cost down for some of these LiDAR gigs, 5 to 10K. For all the additions that are being put on, which seems like a way, way, way more reduced price than I think what we'd seen previously.
Even still, though, I think it's going to be 3 times as expensive as like a Cybercab to build with all those sensors and whatnot. And mind you, Zeekr's a Chinese company, so this car is not built in the U.S. They're going to have to import that and might have to pay some duties.
Not just some duties. They're going to have to pay 100% tariff on this car. So, the Jaguar I-Pace was about a $70,000 car. This Zeekr van is about a $40,000 vehicle before the sensors and everything. That was supposed to be a big cost savings for them, but the tariffs have kind of taken it right back up to Jaguar I-Pace range.
Yep.
And I think all those sensors are added in Arizona. So that part will be kind of added into the US, but importing the vehicle, I mean, the challenge here really is, okay, can these guys get an additional 100,000 cars out onto the road? First, you need to import the vehicle from China. You need to send it to Mesa, Arizona. You need to take the vehicle apart, add the sensors back in. It's actually a slightly different sensor suite than the current Waymo vehicles. If you look at the current Waymo vehicles, they've got a LiDAR in the rear. That's been removed. It's been replaced with those side LiDARs that you see. So they're going to have to do some additional validation before this is performing as well as the existing Waymo vehicles. It's it's a pretty major sensor suite change, and their ability to mass produce these is still made difficult by a lot of these barriers, trade barriers, manufacturing barriers. This isn't like Tesla where they've got a factory just churning out 1 million vehicles and you can just take them and put them on the road. So it's a step forward, I think, in cost for them, but fundamentally the unit economics are still pretty similar. They're not going to be able to, I think their Mesa plant has capacity for maybe tens of thousands of vehicles at most. In terms of getting hundreds of thousands or millions of these on the road, they're not geared up for that kind of mass production yet.
Yeah, and that sixth generation Waymo hardware, 13 cameras, I think 4 LiDAR, 6 radars. And then there's, what did they say, 10 little 3-inch windshield wipers to clean the sensors. And then they said Waymo says there's 1 reservoir tank. And so there's lines that go all over the vehicle to be able to push that fluid to be able to clean the sensors. That must be pretty complicated. But it really can't compare to a fully optimized and integrated Cybercab, and where Tesla owns and develops the hardware, the software, the manufacturing. They build it themselves. That's really hard to compete with, I think, if you're a Waymo.
Yeah, I mean, a $25,000 purpose-built autonomous vehicle nobody's even talking about something like that in the rest of the industry. The, I mean, it's hard to even just find an EV for $25,000, let alone an EV with the sensor suite needed for autonomy. So Tesla is actually mass producing these, and they're at a cost level that is, I mean, they can build 3 or 4 cars, 3 or 4 cybercabs for the same cost that it's going to take to build one of these Waymo Z-Crew vehicles.
Got it. Got it. It's interesting also because obviously you're in two different sides here where Tesla's producing these vehicles with the goal of selling them as well in large, right? And on Waymo's side, that's not your goal at all, right? You're just producing them to be on the road. So it creates a little bit of a difference in demand and how much you're going to try to create.
Yeah, definitely.
I actually do think, by the way, that the new Waymos look a little bit better as well, just exterior.
Yeah, I prefer these, over the Jaguar I-Paces. Yeah.
I'll be interested to ride in one. Omar, you obviously are speaking a lot about it. Are they actually, do they have them on the roads yet? Have you seen one, been in
There's
one?
definitely a lot of engineering prototypes on the road. They're becoming a common sight. Like I said, the sensor suite is entirely new. So there's a lot of engineering validation that's going into it before they replace the Jaguar I-Pace fleet. And it's really quite urgent because Jaguar has made all the I-Paces that they're going to make. And they've sent Waymo a final delivery of 2,000 cars. Once those 2,000 cars are extinguished, there aren't any more coming. So Waymo really needs to validate the 6th generation driver and get it on the road to continue expanding.
Evan, I just put a video in the Gigacast chat that a subscriber sent me last night, and he spotted it yesterday, this Waymo 6th generation hardware prototype in Houston, Texas. So these things are definitely sort of scattered across various cities in the U.S. It's funny to see all the spinning LiDAR bits all over the vehicle, but gonna be an interesting race.
Absolutely. All right. A lot of good stuff there covered. And again, for the audience, if you have additional questions on these pieces, throw them in the chat. If you have thoughts on Waymo versus Robotaxi, definitely let us know below as well. Let's roll into the next big topic here. Actually, let's watch this video first.
There we go. I mean, look at all those moving parts. Crazy.
Have you seen the video of, I think it was like an infrared camera and what it looks like when a Waymo drives by?
No. Yes, I have actually. Yeah.
It's just throwing off all this infrared light from the LiDAR and other stuff like that. I asked Grok and it said apparently it's not like unhealthy or anything like that. But it is just funny to see how it looks on these cameras.
It is interesting that the LiDAR on actually the new all-electric Volvo EX90, I think it is, actually will damage your camera sensor in your iPhone if you hold it like directly in front of it, that's not great. I don't know if it still does that or if they've sort of fixed that somehow, but that was only a few months ago that was the case. So, but I'm not saying Waymos do that. I just know that was an issue with the Volvo.
Got it. Okay, next big topic here for Tesla, and this is pretty big update this week, is on the Megapack side of things. So it was either their second largest or their largest order ever, correct, Sawyer?
Yeah, so Tesla secured a massive new $2.7 billion Megapack order from Georgia Power, and it includes roughly over 3 gigawatt hours of combined capacity across over 10 battery electric facilities across 8 sites in the state. And they're going to use Tesla's 4-hour duration Megapack, so not the 2-hour, but the 4-hour. And I did rough estimates. If I'm wrong, let me know. But I think this will be enough power to power over 2 million homes for 4 hours, which is pretty incredible. And again, it's going to be across multiple sites. But I think they would come online if the project gets approval, which I think it will, based on historical precedent. But they'll come online between 2028 and 2030. So it's going to be a little while before Tesla can actually recognize, the revenue from that. But this project alone, Tesla Energy in general has a 30.5% gross margin, I believe. So you're looking at, $800 or $900 million in gross profit from this one order. and that's pretty incredible. And honestly, my 2.7 billion number is probably a little bit conservative. They didn't. I actually read the filing, and they sort of redacted all of the information regarding to price. So I kind of had to do some rough math, but this is a massive order, and just goes to show that we're still really in the early innings of Tesla energy and the ultimate demand I think we're going to see for large grid scale battery energy storage, because it's much easier and quicker and cheaper to bring online big battery energy storage facilities than it is to bring on, coal peaker plants, for example. If you need, for example, in California, if you need a lot more energy pumped into the grid immediately between, like, let's say the 5 p.m. window when energy needs are the highest, you just switch on a lot of these megapack systems that, charged up on cheap energy during the night, and then you discharge it during the expensive energy times during the day. That's sort of the purpose of most of these facilities. And we've seen a lot of adoption in Australia with this technology, but I think the U.S. is still really just getting started, especially with all these massive AI data centers coming online in the coming years. I think a lot of these systems are going to need, battery energy storage to be able to deal with the power fluctuations of those facilities, because fossil fuel generators just can't keep up with it. So this is, a massive order. It's going to be a little while before they recognize the revenue, but the growth continues for the megapack business.
Yeah, I mean, this is one customer, right? One customer. So the world is going to need a lot of batteries. You're looking at all these AI data centers that are being created, these AI wars, 100 million spent, 1 billion spent just to hire one guy.
Yeah.
There's massive investments in AI. You want to build a 100+ stall supercharger site, we're going to need a lot of these batteries on the grid. So I think this is just the tip of the iceberg. They've got the Lathrop facility. Now they've got Shanghai. There's going to be another facility in Texas. The demand for batteries, you just sort of do the math on how many batteries would be needed to power the whole grid. It's kind of just mind-boggling. So I think this is the very early days for Tesla Energy. I think it's going to continue to expand, and I love the energy business because it's actually growing and it's actually real. It's not, oh, well, when robots are smarter than humans someday. No, this is just a battery. We're selling it. It's money on the bottom line. So kudos to the Tesla Energy team. I think this is not going to be one of the biggest orders for long. I think we're going to continue to see a lot more projects of this scale.
And if anyone's curious how to actually calculate the revenue Tesla's going to get from these, if you go to Tesla has, on their website, they have a megapack order configuration page. In the 4-hour duration that Georgia Power ordered, it shows if you order 1 megapack, 4-hour duration megapack, it's $1 million roughly, a little bit more than that, but let's say $1 million. But as you order more, obviously Tesla starts to incorporate a larger discount. So the max that you can put into the order configurator is 1,000 megapacks. So that's what I did. And it gives you an 8% discount if you order 1,000 versus just ordering 1. But Georgia Power is ordering over 3,000 megapacks. So, but I can't go above 1,000. So I just sort of incorporated a little bit of a bigger discount. And that's sort of how I got to the $2.7 billion number. But again, that could just be a little bit conservative.
Got it. You guys are talking about, don't be surprised if this isn't the biggest. Do you think that additional customers of this size would be in the same genre? So, this one was Georgia Power. Maybe it's some of the other companies that are, have the exact same needs, or do you see this changing? And you were saying, like, maybe, a company that is putting together a giant cluster, right, of GPTs is going to be the next biggest customer. Is there a lot of variety within these customers, or you think it's a little bit concentrated?
I think there's definitely a lot of variety. I mean, it's a giant battery pack. You can do a lot of different things with it. You can use it to stabilize the grid. You can use it to provide backup power for the grid. You can use it not as a utility, but as an AI data center that wants to provide battery backup for their own data center. You can use it to back a large-scale solar or wind project and store some of that energy to use 24/7. So there's a ton of potential use cases. I think Tesla's software is really unparalleled in terms of what it can do. They can make the battery pretend that it's a natural gas turbine and spin up and ramp down its power output just like a natural gas turbine would. So for these large utility customers like Georgia Power, they can just drop it in and it works just like the power plants that they're used to. So I think there will be more utility customers. I think there will be other types of customers too. The use cases are, pretty long.
I can think of two more uses. One is energy arbitration. You could just literally just build one of these to make money from it. So you essentially charge them on cheap energy during the nighttime, and then you discharge that energy. You sell it back to the grid at a higher price during the day when price per kilowatt hour is more expensive. And Tesla's auto bidder software helps with that actually. So we've already seen multiple projects like that. Another use case would be smaller use case, but for example, PepsiCo is building a brand new Tesla semi-charging station at one of their Frito-Lay facilities in the U.S., and they're actually going to install a big solar field next to it, 960 kilowatts, and they're going to put a Tesla Megapack there. So basically, the solar will charge the Megapacks, and then the Megapacks, or the semis, will be able to charge from the Megapack, the power generated from the solar. So, there's sort of smaller projects like that, but then there's obviously the massive ones like what Georgia Power just did, where they spread it across the state and, use it for peak energy demand needs. And Georgia Power specifically said, we need to prepare for the winters of 2031 and beyond, and we need more energy storage to prepare for that. So that's why they're placing this massive order.
Yeah, nice arbitrage play that you laid out there in regards to daytime and nighttime. Right now, as they continue to scale and get bigger here, who would you guys say is the main competition for them?
I think probably the battery cell makers themselves, BYD and CATL. They also have, utility batteries. That's more in other parts of the world. But Tesla's really set apart by their software. The things that their software can do, Sawyer mentioned Auto Bidder. Auto Bidder is like autopilot for a Megapack. You just put the battery out in your site, and Auto Bidder can look at energy prices, forecast when power prices are going to be high and when they're going to be low, and trade energy for you autonomously so that you make money from your Megapack. That's something that, humans had to do before. Now it can be handled entirely by the AI. So they've got some pretty powerful software. It's really easy to stack these things endlessly together and create a huge battery that really acts like one battery, even though it might be, dozens or hundreds of megapacks. And we've really just been talking about, expanding the power generation of the United States. You see China, they're just building out a ton of power generation capacity. If we want to win in, scaling out autonomous electric vehicles, if we want to win in humanoid robots, if we want to win in building these large AI data centers and being competitive, we're going to need a lot more electric power. And I think Megapack is going to be a key part of that, not only here in the United States, but around the world.
Another way Tesla's actually been tackling that power issue for the grid is that they've created these virtual power plant programs where Tesla Powerwall owners can sign up for this program, and essentially it acts like kind of like one big Megapack system, and that thousands and thousands of Tesla Powerwall owners, if there's a sort of a grid event, emergency event where the grid needs more power, they can sign up for this program where the grid will pay them, let's say $1 or $2 per kilowatt hour to discharge during high grid needs or high service times. And so Powerwall owners, and Omar, I know you signed up, you can actually make money from this more long term. You can actually help pay for some of the costs of the Powerwall itself, which is pretty cool.
Yeah, I'm part of a virtual power plant. We're getting paid about $700 a year. So it's helping to actually pay for the battery pack. And this has got to be the coolest technology. Controlling thousands of power walls, if you make them all charge and discharge at the same time, it's like having a big Megapack battery. So this is like pretty transformational technology, I think. And you look at Tesla now adding Powershare to their vehicles, the Cybertruck being the first vehicle to get Powershare, but I think others are going to get it too. If you could hook up the cars and the virtual power plant, we could really be seeing a future where the average American home has massive battery storage at the home. And if you could coordinate all of that, it's like you could have a mega pack everywhere, a distributed mega pack that a utility, instead of buying a mega pack, they could maybe buy fewer mega packs, but also tap into these power walls and vehicles that are in people's homes. And you're starting to see kind of a solution. You know, people have always said, well, if we move to EVs, how do we scale up the grid? I think what a lot of people don't think about as much is these batteries are playing a huge role in modernizing the grid.
Yeah, and one Cybertruck battery is equivalent to 9.5 Tesla Powerwalls. So if one day we can actually feed that back into the grid, that'll be, I think, really valuable.
Omar, how consistent has the revenue been for you? You mentioned $700. Has that gone up over time, down over time? And how long have you been earning that for?
It's pretty constant. You know, you kind of know what to expect at the beginning of the year. So yeah, it's been pretty much on target from what they told me to expect.
How often do you see like those grid events happen?
It's not often, you know, maybe every month or two.
Mm-hmm.
But those events that they need them for, they really need them for, right? You're talking about your hottest days of the summer where they're worried about not being able to power everyone's AC. And those batteries will just charge up at night off peak. And then when you're in those huge peak hours, they'll discharge. And all of them discharging at the same time can prevent the grid from overloading.
Gob, you'll think this is cool. I don't know if you saw my post on this, but, and I'll put it in the chat for you to put up, Evan. Tesla created a live dashboard where you can see the virtual power plant program in Puerto Rico, a live view of it. And there's 63,000 Tesla Powerwalls all signed up. I guess there's 59 now. It sort of fluctuates every day almost. But you can see sort of the total power, total battery power, and when they're charging and discharging, it's pretty cool.
Yeah, I know
So
people
click
in
that
Puerto
link.
Rico who have these.
There you go. And then if you scroll down a little bit, you'll see those are all where all the power walls are, and then that's sort of the total battery power, and that's a live view right now of where they are in terms of being charged and discharged. And right now they're charging or discharging rather.
Yeah, I assume this is probably one of their better use cases for needing these power walls. I know the guy who's my general contractor right now has 2 power walls at his place that he just utilizes, and I've seen them. I was at an Airbnb that had one as well. I wanted to get one, but unfortunately it wouldn't work with my place. I guess it's complicated with charging it up off of like a condo's energy supply. It sounds like you do have to have a house or something like that. But yeah, I could see it being a major use case, especially as they go through heat swells, or if they were to perhaps get hit by, you know, God forbid, like a hurricane or something like that, right?
Yeah.
But that's the cool thing about the virtual power plant. I mean, these power walls are actually helping power your house. Even though you don't have a power wall there, all the other power walls in other people's homes are supporting the grid. So
Maybe
the
that's what's been making
Gigacast
it, maybe that's what's
powered
been
by
making it more
Powerwall.
stable. Yeah.
Yeah.
Because I have not really lost power for like 3 months. It's been awesome.
Nice.
So maybe these things are kicking in and helping keep the grid up. So I appreciate them for that. Okay, one more topic, and then we're going to do a fun section. Everyone stick around. We're going to go through Elon's interactions with Omar and Sawyer. Yes, most of them are one word, and that word is interesting. But there are some other comments in there as well. All right, let's take a look at one more topic here. And this is a little bit separate from Tesla, but this is the private markets. And so we've talked often about how, you know, Elon Musk with SpaceX had the highest valued private company in the world. And we talked a lot about SpaceX going public and things like that. But there is a newcomer into this party. OpenAI is now, or has now raised, or is going to raise, I believe that they raised it already, at $500 billion And they said that their last round, which was at 300 billion, was over 8x subscribed to what they were trying to raise. So they weren't even able to take a lot of the money that they wanted to bring in. So here we go. Yes, it's a potential secondary sale of the stock at 500 billion right there. That would make the most valuable private company in the world. And my guess is they're going to have no problem filling out this round as well. They've just continued to increase. I believe they have 700 million weekly or monthly users. It's really continuing to power up. So just curious to get 700. No, it can't be 700,000 weekly. Yeah, 700 million weekly. Yeah, I was going to say. I think they had 700,000 weekly their first week. And so, yeah, it's continuing to just absolutely expand. And the big piece right there, this would now be valued at 50% of Tesla's current valuation, which is absolutely wild. So just curious to get your guys' thoughts on these valuations, especially when it comes to AI, because Tesla, XAI, all these companies, they have massive AI components. So I think that this is a good thing.
I mean, the market is willing to pay massive premiums for companies that are in the AI space, especially ones that are leaders in the AI space, which, you know, OpenAI is a leader. And I think they have $13 billion roughly annualized revenue right now. And that's before ChatGPT comes out, which sounds like it's coming out in the next, you know, couple of days or so. And so that should just increase the revenue amount of users. And I think that is right, 700 million a week, which is pretty wild.
Yeah.
And I think
and confirm they did not do this yet. They're in talks to do the sale. But yeah, please.
Yeah, correct. They haven't finished it yet, but demand is crazy for companies like this. I think if this were to trade publicly, it would be much higher than 500 billion. You know, Palantir is a $410 billion company, and they just had their first ever $1 billion quarter. So that just imagine what OpenAI would trade at. The growth has been really good. It's certainly big competition for Grok. I think like XAI has like $500 million run rate of revenue a year annualized. I don't know how accurate that is because that's just based on, you know, like a Bloomberg report or something. But
so
OpenAI,
real quick,
yeah.
Evan, pull that screen back up. So this would say that OpenAI is worth more than Netflix at that valuation, and it would be what, the 19th most valuable company in the entire world.
Crazy.
Mind-blowing.
Well, I mean, you know, you want to be careful comparing public valuations to private valuations. Private valuations can be inflated. If they go public on the market, what's the market going to support? I don't know. You know, clearly OpenAI is the Coca-Cola of AI. As much as Elon has tried to change that, I think that's still true. So, you know, I'm kind of scratching my head as an investor. I think the purpose here of the secondary sale is really to give their employees some liquidity, to allow them to get some cash out of that stock that they have. But, you know, I'm buying a $500 billion nonprofit here. I still think the corporate structure is a little bit confusing. You know, they talk
weird.
about, yeah, they talk about, you know, a nonprofit and the profit's capped. It makes me nervous as an investor. I don't get it. And I'm not sure what the exit plan is here. Do they eventually IPO? Do they sell to somebody? I mean, who could even do a $500 billion acquisition? Can you IPO a nonprofit? I'm a little bit confused, but you know, certainly I don't think they're going to have trouble selling these shares in the secondary offering. I think that'll bring some good liquidity to employees. Hopefully, you know, fend off Mark Zuckerberg and his crazy offers. But yeah, this AI race is like nothing I've ever seen before in terms of compensation valuations. I mean, you know, a $500 billion private company. Typically, companies went public well before they had $500 billion valuation. So, I mean, we may see a $1 trillion private startup, which is something we've never seen in markets before.
I think public exchanges should be asking, why are we in a situation where private companies are having valuations as high as, you know, SpaceX 400 billion, OpenAI 500 billion, and why do they feel the need not to go public? And what can we do to incentivize them to go public? Because from my perspective, I think Elon hates being public. I mean, we know this. He hates it. And I think there's so many rules and regulations and things that you're subject to, such as shareholder lawsuits, that you're just not subject to if you're a private company. Raising money is much easier at a private company. Whereas if you're a public company, the stock would probably drop because you're diluting or whatever. That doesn't really happen if you're a private company. So it's really interesting that we're at a point where we have $500 billion companies and they're still wanting to stay private. It's pretty wild.
Yeah, it's kind of nuts, and it's really sad for retail investors. You
Yeah.
talk about the Microsoft millionaires, people who became millionaires just buying Microsoft stock on public markets and just holding on for the ride. You don't see that as much anymore. The companies that get rich off these early stage startups are VCs, private equity firms, angel investors, and less the average retail investor. And Sawyer listed off a lot of great reasons. You go public, now you're dealing with shareholder litigation. Now you're dealing with what can I say and what can I not say to avoid violating securities laws, quiet periods, public earnings calls, not to mention a lot of regulation, especially post Enron, that just makes the cost of compliance, accounting, auditing for a public company just massive. So we've got an administration here in the Trump administration that is been pursuing a lot of deregulation, some of it, more positive than others. But I think they should really take a look at allowing retail investors to have access to these early stage companies. And how can we actually make it easier for companies to go public sooner rather than stay in the private markets forever? That I think has to include less stringent regulations, maybe an easing in period for some of these early startups, as well as probably reform of shareholder litigation to protect some of these companies from a lot of the liabilities that come with going public. I think it would be really good for the public to be able to access these private companies. I would love to be able to invest in SpaceX. I would love to be able to invest in XAI. I would love to even be able to invest in OpenAI or Anthropic or some of these other companies. So I think this is something that hopefully can get done in this administration.
It is unfortunate that all these transformative companies that are changing the world are private, and really it's just enabling the rich to get richer in terms of who has access to these investments. Like retail investors would love to invest in SpaceX. I get DMs all the time about that, but they can't get access. And it's unfortunate because the retail investors are some of their biggest supporters, but they can't get access.
And they really have to end up going through this sketchy process where you're going with a third party that's pooling funds from retail investors. They're taking a huge fee. They're, managing it. It's very sort of opaque. It's definitely not friendly to your average mom and pop investor. There's no doubt about that.
Yeah, I have 3 thoughts on this. First, I agree with you guys that they should maybe change some of the rules to incentivize companies to go public, but a lot of the rules that are in place for very good reasons as well. A lot of the things, because a lot of these companies that are going public are at maybe $1 billion valuation or a couple $100 million even, right? And I think that you do want to protect retail to a point. And you mentioned Enron, right? Like that's kind of, I think, what started a lot of these things, but that's a cautionary tale right there, right? And I think that people should keep that in mind with these pieces. Number 2, I think there's also an interesting play here with now what Robinhood's doing with tokenizing equity inside of these companies, where they basically were like, hey, we have shares that we purchased on the private market. We can tokenize these and give people access on the Robinhood blockchain. And that led to the whole story of whatever was SpaceX or OpenAI coming out and saying like, no, this is not you actually buying our stock. And they're like, yes, we know, but it's a direct equivalent, right? We're tokenizing.
Just all these hoops. It just sucks. Like,
yeah. Yeah. And so there's those pieces. And then the last thing, which is like something that Omar alluded to, which is more like the pooled funds. Like you have, I know right now, Kathy Wood, they have the ARK Venture Fund. And I think you can put in, like as low as $250 And it's a pool though of these different names. Now there's good stuff in there. There's SpaceX and OpenAI and
But then you got to own other companies you might not want to own. You know what I mean?
Yes. So that's what I'm saying. There's no like perfect method right now. You kind of have these workarounds that people are building.
I do wonder if I remember there was rumors about BlackRock and others like teaming up to create a Texas stock exchange. So maybe that would be like a way for some of these companies to go public, but in a more favorable regulatory environment for them that wouldn't subject them to crazy shareholder lawsuits and whatnot. And some of maybe they wouldn't have to do quarterly reports, make it be twice a year or whatever.
Well, it's already changed a lot to make it, more favorable for companies to go public. If you look at the New York Stock Exchange for a long time, you couldn't go public unless you were profitable, right? That was a big rule that stopped people from going public, and that's been taken out. And so I think that's continued to change and progress. And so I do think that we're headed in the right direction there with these private public companies, but I also completely understand people like Elon right now who have taken enough, shit for Tesla, let alone others, to say, all right, well, I'm just gonna hang out on the back end. And I agree with you guys also on the secondary sale, just providing some liquidity, because you have these employees who may have just been largely working off comp packages, or maybe took almost everything in equity shares, and now they're sitting there, years and years later, and they're like, okay, what are we doing? We're not going public, so how am I going to feed my family? And so it does provide a little bit of exposure and resources for them. So any other thoughts on this topic, guys?
Yeah, I think the issue isn't really the exchanges. It's really U.S. law, federal and state law. So I think that's really, I think that's really where the reform needs to happen.
True.
These companies used to go public to get access to capital. There was no other way to get large amounts of capital. Nowadays, the private markets, they're happy to put in all the capital that these companies need. So yeah, why put up with all of that? I do think there needs to be some concessions to really allow the average retail investor, probably a lot of the people who are watching this show, to be able to trade these things freely, to not have them locked up. So hopefully that's something we can see happen, but this has been a discussion for a long time now.
Yeah, I always find it funny. It's like the average retail investor can't invest in these booming private companies, but you can go to the casino and gamble away all your life savings,
Or like sports betting. Like, come on now. Just let us buy companies.
Or shit coins, There's
oh my god,
there's some double standards for sure.
Specifically, the whole Mars shitcoin. That's
right. I have my own shitcoin now.
There you go. I've been keeping my eye on it. Oh my gosh. Official, non-official coin of the Gigacast. No, I'm just kidding. Do your own research. Okay. Really good stuff, guys. I want to just dive into the section. We're just going to do a couple minutes here looking at replies that the two of you have gotten this past week from Senior Musk. Let's take a look. Evan, pull up the most interesting. Sawyer, you want to run through some of these that he engaged with you?
Yeah, sure. So Tesla, or Elon, said that Tesla's Optimus robot just has a world model for training, and basically they just use human created videos and have Optimus train off that. And Elon's like, this is the only way to learn the world, really. You can't just create simulations, right? You got to actually have the real world and show Optimus the real world, not just do it all in simulation. So
it's facts, and that's I think that was one of the big things that changed with FSD as well, right? Was they were doing a lot of stuff off of creating and showing it through AI, but there's nothing that can replace those real world miles.
Yeah, I mean, real world is more ground truth than simulation, right? So real world's better. But sometimes you need to supplement it with simulation. Yeah, Grok getting better every day. Grok Imagine is cool. It is getting better and quickly, but I don't think it's still quite as good as,
Oh, did they give you access again?
Yeah, I got access again.
They listened to our episode. They said, damn.
Yeah, but VO3 is still better, but, Grok's getting there. It's their first go at it, so. Yeah. Creates weird videos.
I have seen some very odd videos.
That one's actually real. Sawyer was doing that.
It's a new launch mode. Yeah, we don't even need to cover that. That's not worth it. Yeah, I mean, I don't know how much there is really realistically to say, but
nice.
it sounds like they have a better video model coming in a few weeks. So,
Omar, what do you think was your wildest post this week that Elon replied to?
you're muted.
Oh, you're muted. You're muted.
Oh yeah, I think the one where he's laughing was actually kind of interesting, where you see this new model from Google where they can not only generate a scene but actually allow you to, push a button and explore the scene.
That's so
I
wild.
mean, I'm sorry, Grok Imagine, very nice, very fast, but damn, I said GTA 7 is about to be wild. So, imagine playing a Grand Theft Auto game that's like photorealistic. I think that's kind of what we're moving into here, where instead of traditional video game rendering, you have this sort of AI rendering where it can generate scenes that are more photorealistic than anything we've ever seen in video games before. And that's kind of insane to think about.
Look at that. I mean, that's so nuts.
That car was sharp when they were showing it.
And normally in AI, you see
Oh my
things
God.
kind of like morphing, changing. The consistency here, the ability to keep the world consistent is really something else. So I think we're just getting started in terms of what these generative models can do. It's getting crazy.
Go to
Did you
the end
guys-
of that video again. Watch the dude walk through the shrubs, like, and the way the shrubs react. I don't see that in any current video game. Look at that. It's so realistic. That's crazy.
Yeah, it's incredible.
Did you guys see this post? And I'll get his name right this time, Jacob Hilton. Thanks for calling me out before. But he had a post yesterday, and he said 2 times this week. So he said, I don't know, he's been tracking Elon's posts for a year plus or maybe multiple years. He, on August 3rd, said Elon Musk has posted 146 times on X today, the most he has posted by far since Jacob started tracking. He covered all in his video. Almost like 90% of those posts were about XAI. Then he posted again yesterday on August 5th, and he said Elon has posted 147 times on X today, breaking the record that he previously set 2 days ago. And again, over 85 of those posts were about XAI, then AI, then Tesla. There was some politics mixed in. So yeah, this is just nuts. I mean, how is this guy posting almost 150 times a day on X?
That's probably why when like he quote posts me, it doesn't get like 30 million views like it used to. It gets like 3 to 5 because there's just so many posts that he's doing a day. Crazy.
Look, I'm just glad he's not writing 150 posts about the woke mind virus.
Yeah.
Facts. Or about politics or whatever.
Yeah, it's still just like an insane amount of comments and posts on X for a single day. I think he might have Evan beat, and Evan posts like more than anyone I know. So Elon is truly addicted. Do you guys think it's all him? Do you think there's anyone else on this account?
No.
No.
The amount of risk involved with giving anyone else access to his X account.
That's what I was thinking, but I was like, God, if I had to post 150
you could
times
cause
a day, I
stock
don't know.
drops.
I don't know
Like,
how
you
to
don't want that.
You could, Sawyer, he does. But
But let him do it himself, not have someone else do it.
No, I think that's important to him, being authentic, actually
Yeah.
using the account himself.
Yeah, just an insane amount of posts from Elon. Obviously, a lot of them engaging with you guys, retweeting, sharing out stuff. A lot of fun ones. Now we get 10x instead. Oh, this one was interesting as well. I think there was one point that was on Grok about the 10x, or is this the FSD update? The 10X?
Yeah.
A
This
lot-
is
a
the
lot of
new
10Xing
FSD
going on.
update. Yeah, so we haven't had a major new FSD update really since November of last year. So they're working on a much larger model, 10 times the parameter count. Elon says he thinks that might start shipping at the end of next month, at the end of September. So September, October, we'll probably start to see this roll out. 10x larger model is probably going to be a lot more intelligent than the current model. It's going to be incorporating a lot of what we're seeing with the Robotaxi, and I think it's also going to help the Robotaxi cross over into not needing a safety monitor. So I'm super excited about that next FSD update.
Yeah, gets me hype. A lot of 10xing, like I was saying, going on. 10x there, 10x on Grok. They'll 10x the Geo-Fence. All these things are just continuing to move outwards. All right, super fun episode, guys. A lot covered here, from Elon's pay package to OpenAI's valuation, mega pack, so much more in between. Omar, any other comments that you'd like to share on this one? Anything else you'd want to hit on?
No, I think, there's always a lot of drama. There's always a lot of crazy stuff going on. The thing that I just kind of focus on as an investor is self-driving cars are here. The world is going to need a lot of them, right? All the driving that's now happening manually and more needs to move over to autonomous vehicles. This is going to be one of the most massive changes we've seen in society since really the smartphone. There aren't a lot of things that compare. It may be kind of unprecedented. And I think Tesla's going to play a central role in making that happen. So we need millions of self-driving cars made and shipped to every corner of the world. And right now there's really only one company that's equipped to do it. So I'm really excited about where Tesla is.
Me as well. Before Sawyer goes with final comments, for everyone that watched this far, go ahead and smash that subscribe button. We broke through 6,000 subs. Really, really great week last week. Let's keep that rolling. We're going to continue to produce high quality, fantastic content for you on a weekly basis about everything across the board with Musk Industries, Tesla, SpaceX, XAI, and so many more. So just continue to listen in here. And of course, we appreciate those that continue to drop comments. And actually, I will shout out, my favorite comment last week was actually a hate comment, but I appreciated it. There was a comment that said, "Just three nerds yapping, huh?" And I was actually very honored to be roped in as a fellow nerd. So I was appreciative of that. Sawyer, do you have any final comments for this one?
No, I just really looking forward to that proxy coming out next month. And like I said, gonna be the shareholder meeting this November is probably gonna be even more interesting than the last one where we voted on Elon's 2018 comp package revote. This one will be for a new comp package and the XAI investment. So gonna be a big one. Make sure you're all set up to vote, by the way. That was an issue last time. A lot of people didn't know how to vote or, what the rules were. Just like reach out to your broker, make sure that you can vote, even if you're overseas. I know it's more difficult overseas, but, there's some creative ways to get around that.
Yeah, we'll keep people in the loop as we draw closer to these dates, but 100% make sure you're set up to vote. If you don't know how to, maybe ask Grok. Probably walk you through and explain the process. We'll be back on again next week. For those on Spotify, 5 stars, please go ahead and give us that rating. We're trying to distribute this as many places as possible. Looking forward to the next one. As always, stay frosty in this Tesla world. We'll talk to you then.